Good afternoon, everybody. Welcome to today's CFIB webinar, Ontario Targeting Retailers on Bill 148, Are You Ready? Today we're going to talk about the new labor legislation Ontario introduced at the beginning of the year, what it means for your business, and what's happening moving forward. I'll start by introducing CFIB, briefly discussing how we got here, and then I'll get into some of the more significant parts of the bill, and then after that I will take any questions. If you do have any questions as we go along, please enter them in the panel on the right side of your screen. If you can't see the panel, try clicking on the orange arrow and then it should appear. So my name is Ryan Mallough. I'm the Senior Policy Analyst for Ontario with the Canadian Federation of Independent Business, and I'm one of the main people responsible for our work on Bill 148. Here at CFIB, we represent 110,000 small businesses across Canada with 42,000 members here in Ontario. We are nonpartisan, our policies and stances are member-driven, and we are member-funded. You may be familiar with a lot of this, but I did want to key in on our Business Resources Department just before we get started. Many of you are likely familiar with our Business Resource Counselors, who our members can call into for advice and support in dealing with government policies and understanding new rules and compliance. These guys are really our team on the front lines. They deal with all of our members' concerns on a day-to-day basis. And before Bill 148 came into an effect, an average day for our counselors looked at something like 40 cases per day. Since Bill 148 came into effect, that number has effectively doubled. The new normal looks like 70 to 80 cases, and we do periodically spike into triple digits. We do get calls on all kinds of issues, but the vast majority and reason for the uptick has been the confusion around the new rules brought on by Bill 148. And as you can see, our membership crosses all sectors, with retail being the largest segment. So how did we get here? Well, as you may remember, last year on May 30th, the government announced the Fair Workplaces, Better Jobs Act, which we know as Bill 148. And I'm going to continue to call it Bill 148 and refer to it as Bill 148 because we do take exception to the name of the bill. We don't think it was especially fair. The bill included a plan to move to a $15 minimum wage, which drew most of the attention when it was announced, as well as some other major employment standards changes, including personal emergency leave days, changes to the stat holiday pay formula, vacation entitlements, equal pay for equal work provisions, unionization changes, new scheduling provisions, and enhanced enforcement, all of which we will talk about today. So the big headline item here was the $15 minimum wage. On January 1st of this year, the general rate jumped from $14 from $11.60 and up to $12.20 for liquor servers and $13.15 for students. And for the purposes of minimum wage rates, a student is someone under 18 working less than 28 hours a week during the school year or working during the summer holiday. On January 1st of next year, we'll see another dollar increase in the general rate to $15, as well as a jump to $13.05 for liquor servers and $14.10 for students. Now, this is the plan in its current form as the legislation currently exists. However, during the election, Doug Ford and the Conservatives did promise to make a change. The Conservative plan is to freeze the minimum wage at its current $14 rate and eliminate provincial income tax for minimum wage earners. In order to do this, the Conservatives are going to have to pass legislation amending Bill 148 sometime before 2019. We don't have any details yet on a timeline, and the government isn't officially sworn in until Friday. But until they introduce and pass legislation, the minimum wage is still on track to go to $15. That being said, we do expect that they will keep this promise and pass their plan to freeze it. We have no information right now on how long the freeze will last, whether they plan on re-indexing the minimum wage to inflation, and if and when anything like that would take an effect. I do encourage you all to keep an eye on CFIB-FCEI. We will have the latest information as it becomes available to us. So while minimum wage was the big story coming out of Bill 148, since January 1st, that hasn't really been what the phone calls into our BR counselors have been about. Rather, it's been about everything else in the bill that didn't receive as much attention at the end of last year. So on January 2nd, the very first working day of the year, we were flooded with calls on employees taking their first personal emergency leave days. Flooded. Based on the new rules, all employees are entitled to 10 personal emergency leave days per calendar year. The first 2 days taken have to be paid even if an employee doesn't want to. So they can't negotiate saying, I want to take an unpaid day and I'll take my paid one next week. Those first 2 days absolutely have to be the ones that are paid. The one exception here is for new hires. Personal emergency leave eligibility kicks in upon employment, but the paid days don't kick in until the 1 week of employment mark. So for example, if an employee were to start today and need to take a PEL day tomorrow, they can, but that day would be unpaid. If they then needed to take another one 2 weeks from now, that one would count as the first of the 2 paid days, but the second of the 10 days overall. These days also cannot be prorated. So if you bring someone in with 10 days left in the year, they're still entitled to 10 days. Once the calendar rolls over to 2019, everyone becomes eligible for a fresh 10 days, 2 paid all over again. And PEL days can also be taken at any time during a shift. So if you have an employee who comes in the morning, starts to feel unwell and takes the afternoon off sick, they're allowed to do that. But for your counting purposes, that counts as a full day. You don't have to track half days or quarter days or anything like that. Whenever someone takes PEL for any amount of time, that does count as a full day. So what can these days be used for? Well, on the personal side, it's fairly straightforward: personal illness, personal injury, or personal medical emergency. Where it gets a little more complicated is that the days can also be used for the death, illness, injury, medical emergency, or quote unquote urgent matter related to a family member. And that's where it gets tricky, is when you try to define what an urgent matter is. According to the government, an urgent matter is an unplanned or out of the employee's control event that can cause serious negative consequences, including emotional harm if not responded to. So for example, if there's a break-in at someone's parents' house or a meeting with the school principal that they couldn't schedule at any other time, that would count as an urgent matter. However, leaving work early to, say, catch a kid's soccer game does not count as an urgent matter unless the employee can prove that missing the game would have serious negative consequences. And again, this is where it can get a little bit dicey. Employees are supposed to give notice as soon as they can, but it can be after the fact or retroactively. And you cannot assign a personal emergency leave day. The employee has to let you know that they are taking or took one, which is to say, if you have an employee who just doesn't show up for work one day, you cannot assume that they're taking a personal emergency leave day. They do need to let you know. When they return, you can ask them if that was the case. That's okay, but you can't just assume without telling them and mark one of the days off. In some circumstances, you can ask for proof, though under no circumstances can that proof be a doctor's note or any other medical professional's note. The proof that you do ask for has to be considered reasonable by the ministry. So for example, if an employee is taking bereavement leave because a family member has passed away, you could ask them for an obituary, but you do have to be mindful of the circumstances, and it is judged on a case-by-case basis. If you're unsure about whether or not the proof you're looking for is reasonable, again, please do feel free to reach out to our BR counselors who can help walk you through it, or reach out to the Ministry of Labor on your behalf. And note that while you are under no obligation to ask for proof, if you do receive any sort of documentation, either by your request or the employee voluntarily gives it to you, you have to hold on to that documentation for at least 3 years. Failing to do so could result in a fine from a Ministry of Labor inspector. So after the swell of personal emergency leave calls died down, what we started to hear most about were the changes to the statutory holiday pay formula. In fact, per the calls we got in from our members, this is the change that resulted in the most job losses, especially among part-time employees. So under Bill 148, stat holiday pay is calculated by taking the amount of money made in a pay period prior to the holiday and dividing it by the number of shifts worked. In this case, the last and first rule, where employees are required to have worked their last scheduled shift before the holiday and the first scheduled shift after the holiday, does still apply. And this is the formula that you should use when calculating stat holiday pay for Victoria Day. Because just before the election, the previous government passed a regulation that is going to revert back to the pre-Bill 148 formula, which is gross wages earned over the last 4 weeks before the holiday divided by 20. This change takes effect on July 1st for Canada Day. So when you're calculating stat holiday pay for Canada Day, you should be using the pre-Bill 148 formula. We are going, or I believe actually went out this morning, we are sending a reminder out in our monthly e-newsletter that that's the case. We also have the formula available for you online, as well as the date the change takes effect. So keep an eye out for that. All the information is there. And do remember that employment status is not an exemption to paying a stat holiday. Full-time, part-time, they're all entitled to their stat holiday pay. We also saw changes to vacation pay. For employees who have worked fewer than 5 years with your business, nothing has changed. It's still 2 weeks at 4% pay. However, for employees that have worked 5 or more years with your company, it moves up to 3 weeks at 6%. Now that 6% kicks in at the 5-year mark, and this is where it gets a little bit tricky, so bear with me. If you have an employee who hits their 5-year anniversary, say mid-year, say it's in June, you can pay them the 4%, the 2 weeks 4% up to that date in June, but once they hit the 5 years, the ministry has told us that you will then owe them 2% back pay to the beginning of the year to make it that 6%, and then the 6% going forward. So there is a little bit of a retroactive element in the 5th year. And the clock restarts if an employee leaves your company for more than 13 consecutive weeks. So if you have someone who's been with you for, say, 6 years, and they decide to leave and you bring them back a year later, that employee's vacation clock would restart at 0. And on April 1st, we saw the equal pay for equal work provisions kick in. This provision only applies to employees of differing employment statuses. For example, part-time to full-time, seasonal to full-time, part-time to contract. It does not apply if the employment statuses are the same. So this doesn't apply for your full-time to full-time employees or even for your part-time to part-time employees. The 2 employees in question have to have differing employment statuses. And when we're talking about pay here, we are strictly talking about the wage rate. Any benefits or employee perks that you offer are not included when calculating equal. The rule applies to employees doing substantially the same work in substantially the same work environment in the same municipality. So for these employees, as long as their employment status are different, they do have to be paid at the same rate. It's also important to note that this rule allows employees to talk about their salaries in the workplace for the purposes of determining whether they are being paid equally. And based on that conversation, an employee can request a review from you. And when that happens, you will have 2 options. First, you can find that the employee is right, that there is an inequality in pay, and you can increase their salary accordingly. And it's important here that it has to be an increase. You cannot lower anyone's pay to comply with this rule. On the other hand, you might disagree. You may think that there's a perfectly valid reason for the difference in pay. If this is the case, you have to explain what that reason is to your employee in writing, and you have to maintain that record. At that point, it becomes up to the employee if they want to take it any further. They do have the option of going to the Ministry of Labor and Employment Standards and making a complaint. Now, there are some exceptions and exemptions to this rule. For example, students under 18, as long as it's during the holidays or they're working less than 28 hours per week, are exempt. So are volunteer firefighters and employees in the entertainment industry. There are also a number of exceptions, and these are a little bit tricky, so again, bear with me. Exceptions include seniority systems where employees are paid more based on years of service, but the way that this works in the government eye is, for example, if I work at a grocery store, or if I'm an employer at a grocery store, and I say that at the 6-month employment mark, everyone gets a $1 raise, that means I can justify paying someone who's been here for 8 months $1 more than someone who's been here for 4. The kicker is the person who's just starting out has equal opportunity to qualify for that $1 raise at the 6-month mark. That's what they mean by seniority system. So you can pay employees who have been there longer more, but the expectation is that the employees who have been there for less time should expect to be paid at the same level once they've reached the same amount of service time. Similarly, merit systems also qualify as an exception. This is like being paid on commission with, say, a sales target. So if I say, we're at a car dealership, and if everyone hits their sales quota, they get a 4% raise, you can justify a difference in pay for those who made the quota and those who didn't based on that. The kicker being that everyone had equal opportunity to meet the target. If you are working off of one of these systems, the government does recommend that they be transparent, documented, and communicated to employees, which is to say that you are open with salary expectations and the progressions of the given job in the workplace. Now, that is not mandatory yet, but it is what the government is recommending moving forward so that it's clear to employees. We also saw a number of changes to unionization rules. The biggest of which was allowing card-based certification in the building services, temporary help agency, and home care and community services industries. Card-based certification means that there does not need to be a secret ballot vote to unionize. Once 55% of workers sign the card, the union can be certified. In any industry outside of those three, you still hold the secret ballot vote before certification is allowed. Unions will also be granted access to employee lists if 20% of your workforce signs a card. This means that if the union thinks they've got 20% of your workforce and it turns out to be true, they can go to the Ontario Labour Board and ask for your employee's contact information. This would include the phone number, name, and personal email address of every single one of your employees, and that's designed to make the unionization process easier for organizers. So at this point, all the changes I have covered so far are currently in effect. The incoming government has not made any indication that they'll be reversing any of these rules or making any changes outside of their commitment to the minimum wage. We do expect that one to come in. That being said, we at CFIB will be working with the new Labour Minister, who we expect to be announced on Friday, to identify where changes can be made, and we are hopeful that we will see these rules relaxed and re-examined. That being said, the big one is the one that still hasn't come into effect yet, and that's scheduling. Scheduled to take place on January 1st, 2019, there will be significant changes to scheduling, including a 48-hour notice shift cancellation penalty, where employers who cancel shifts within 48 hours of their start time will have to pay the employee for 3 hours at the regular rate. There will be a 96 hours new shift notice period where employees can refuse shifts with no penalty if they find out about the start time within 96 hours, which is 4 days of the start time. And a minimum on-call pay requirement, which will require 3 hours pay minimum at the employee's regular rate for being on call. As it stands, these rules are all still on track to come into effect. And once they do, you will be required to track and maintain record of all of it. Any scheduling changes that have been made, the dates and times that those changes were made, any new shifts that were created and the dates and times that they were created, and when employees were required to be on call. And once that comes into effect, MOL inspectors will be checking for those records, and again, not having them will result in fines. There are some exceptions already baked in. When it comes to canceling a shift, if it's due to fire, lightning, power failure, storms, or similar causes beyond the employer's control, a shift will be allowed to be canceled without penalty. Shifts can also be canceled if the work is weather dependent and the employer cannot provide work for weather-related reasons. In some cases, this is clear cut. For example, if you work at a golf course and there's a thunderstorm, a shift could be canceled with no penalty. In other cases, it is not so clear cut. And the one example that has come up a fair bit is restaurants and patios, and whether or not they would qualify. So far, we've heard that it's unlikely, but the government has yet to make any commitment on that front. And on the 96 hours notice issue, employees will not be allowed to refuse a shift if it is to deal with an emergency, remedy, reduce a threat to public safety, or ensure the continued delivery of an essential public service. Again, we are seeking clarity in terms of what an emergency does mean, and when we have that information, we will share it. So what ties all of this together is enforcement. The government has brought on 175 new employment standards officers who are now all active and out there, and they put a renewed focus on small business owners. The title of this whole presentation is that Ontario is targeting retailers on 148, and are you ready? The government has released its annual blitz schedule, and across the province, small business retailers are a specific focus on compliance with employment standards and the new employment standards rules. So it is something that they are going to be actively looking for in the next 6 to 8 months. And they are out there with an enforcement first approach. The ministry had felt that before Bill 148, it was largely a customer service focused ministry. Again, we'd be inclined to disagree with that characterization, but they have decided to move more towards enforcement first. So for example, it may have used to be where a officer comes in and they don't see the employment standards poster on your break room wall, and they say, you know what, I'm going to come back tomorrow, make sure that poster's up. Well, now the idea is they come in, they don't see the poster on the wall, and it's a fine, and that is how you learn. And the fines have all been increased. You're looking at about a 30% increase across the board. So they're going to range anywhere from $350 to $1,500 per infraction, which can add up very, very quickly. On a somewhat positive note, the previous government did do some work to start to offset the increased costs that came with Bill 148, including reducing the small business tax rate from 4.5 to 3.5%. The incoming Conservative government has promised to decrease it an additional 0.3%, so it should wind up at 3.2%. They introduced a hiring and retention incentive for young workers where employers can get $1,000 upon hiring a new employee under the age of 30 and an additional $1,000 on that employee making it to the 6-month mark. This only applies to new hires, and it only applies to new hires done through the Service Ontario website. That is the caveat on that one. They also did some work to enhance apprenticeship programs, and generally speaking, these are all pretty positive steps. And had Bill 148 not been there, we would have been quite happy with a lot of these. That being said, Bill 148 is here, and this is nowhere near enough to offset the impact of the new rules and the impact that they're having on your businesses, especially considering more is on its way. We saw employment insurance premiums increase this year. Starting next year, for the next 5 years, Canada Pension Plan premiums are going to go up. There's a lot of talk and concern about the cost of the federally imposed carbon tax, which we'll see next year. Hydro rates are going to start to creep back up over the next couple of years, and whatever else might be coming down the line. So this fight is very much not over yet. It very much continues and will inform a bunch of our work, especially in the early days of this new government. It is something that we are hopeful they will be responsive to, and we are hopeful that we can get some positive results. But in the meantime, the existing rules are very much in effect. And as I mentioned, the blitzes are on, the Ministry of Labor's inspectors are out there, and it is important that you are compliant because they are looking at these rules specifically. So with that, I want to say thank you very much for taking the time to listen to me today. I will take any questions now. I'll also note, if you think of something a little bit later, please feel free to send it along to our BR team, and they'll be happy to help you as well. So I do have a couple of questions here. First one from Denise. She's asking if the 13 weeks off for vacation pay includes maternity leave or sick leave. So as I mentioned earlier around vacation pay, if an employee is away from your business for 13 consecutive weeks, their clock restarts at 0. This is referring to either their contract is up and they don't have a new contract, or they have been laid off or terminated, or they have left for another position. This would not include maternity leave, which is job protected, or long or short-term disability. For instance, in the case of the question, if an employee had a heart attack and was taking time to recover, those are both job protected. So in that case, the 13 weeks would not apply. I have another question here from Karen on the 4% to 6% on the retroactive pay for the first year. So again, the changes to vacation only apply to employees who have reached the 5-year mark or further. Anyone who's under that, it's just 2 weeks vacation at 4%. Anyone who is past the 5-year mark, it is now 3 weeks vacation at 6%. The one tricky part here is when you have an employee who's going to reach that 5-year mark. So if you have an employee whose anniversary is any day after January 1st, so I use the example of June, we could use November, October, doesn't matter. But let's say today is the 5-year anniversary on June 26th. You can have paid that employee 4% pay for vacation up to this date. Moving forward from this date, because they've hit their 5-year anniversary, you have to pay them 6%. According to the ministry, because this is their 5th year, you then have to go back to the beginning of the year and pay them 2% for the amount of time up to the anniversary retroactively to cover it. we've heard an immense amount of frustration from business owners on this issue. If you believe it sounds, or think it sounds silly, you are not alone. I think it sounds silly too. But we have confirmed this multiple times with the ministry that that is how it works. So when you have an employee who hits their 5-year anniversary, if it's, again, if it's in February, March, April, at any point, after that date, you have to pay them 6%. Up to that date, you can still pay them 4%. But once they hit it, you have to go back and pay the 2% for the time that you were paying for from the beginning of the year. I hope that answers your question. I will have someone follow up with you, Karen, as well, because I know it sounds confusing. It even sounds confusing when I say it out loud, and it has been my job for a while now. Another question here from Shannon. Wage equality, she asked, can she pay her manager more than her sales associates? Her manager has a lot more responsibility and the sales associates, but performs similar functions, but the manager manages the floor. In this case, yes, you will be able to pay your manager more because managing is one of their responsibilities. So while a job description will not totally cover you from the equal pay for equal work provisions, we do highly recommend keeping them just so you can keep track of what your employees are doing. But when you have an employee who does something that is significantly different, for example, managing, that would allow you to pay them differently. You would be covered in that case. Do keep in mind that this does not apply to full-time employees. It is only full-time to part-time or any other example where it has differing employment statuses. But if they have the same employment status, then the equal pay rules don't apply. I have another question here from Darlene. Is there any notice of an upcoming audit, or does the auditor just show up at the business and begin? Unfortunately, they just show up at the business and begin. That is how these inspections work. Someone pops in, they do have the right to do that, and they start looking for infractions. You don't get any notice, and the goal there from the ministry is they don't want you to be able to prepare for it. They want you to be compliant whether they're there or not. So you don't get any notice. It is not pleasant, but that is how it works. These are surprise inspections. Another question here from Joanne. Do you have any access to any kind of schedule the inspectors are doing, what areas they're in and when? Yes, we do. It is available on the Ministry of Labor website. It is also available on the CFIB website with a link to the official ministry one. So we do have that information, and I would be happy to send that around to you after the presentation. I also have a question here from Christina on the green booklet and trying to get it. Christina, I will have someone from BR call and touch base with you about how to get that. But yes, I will make sure that that someone reaches out and explains how to grab that. A question from Jody on the scheduling changes, and if I could go over those again, and yes, happily, I'll go over those briefly. So the changes to scheduling, first and foremost, do not take effect until January 1st, 2019. So you don't need to be doing any of this now or worrying about any of this now. You only need to worry about it if the government makes no changes and it comes into effect on January 1st. And we will give all of our members plenty of notice about any changes that happen or don't happen leading up to that date. Now, the changes that are currently on track to take place are a 48 hours notice shift cancellation penalty, where if you cancel an employee shift within 48 hours of its start time, you owe the employee whose shift was canceled 3 hours of pay at the regular rate. There will be a 96 hours new shift notice period, where if you let an employee know about a new shift within 96 hours, which is 4 days of its start time, they have the right to refuse that shift, and you cannot penalize them for doing so. Finally, there will be a on-call pay requirement, which will require you to pay a minimum of 3 hours pay at the employee's regular rate for putting them on call. Now, in this case, if the employee is not called in to do any work, then you just owe them that 3 hours. If they're called in to do work but not 3 hours worth, then you owe them the difference between the work they did and getting to the 3 hour point. If they work for more than 3 hours, then you just pay them as you regularly would for the total amount of work that they did. Another question here from Darlene. Can we get a sample of an employee contract, and is this something we need to have for all employees, even if they've been here since this rule came into effect? I believe we do have some templates for contracts, Darlene. I will get someone from BR to share that with you. As to for it being something you need to have, I'm not 100% sure on the answer, so I will have BR get back to you with that as well. I've seen a couple other questions on the Green Book. For anyone who's asked or anyone else who wants to know, please do write in, and I will have someone from BR get in touch with you about how to get that information. Question from Charlene. If a part-time employee stocks shelf the same as a full-time, but the full-time does orders, does this qualify as enough of a difference to not qualify for equal pay? So it depends on the situation, and it's going to sort of be handled on a case-by-case basis. But without knowing any more details, the explanation that you provided me, I would say yes, that would qualify as enough of a difference. It's the rule in the equal pay for equal work provision is that substantially the same work. So if you've got an employee who does something substantially different or is taking on greater responsibility, such as in this case, taking on orders in addition to stocking shelves, that would qualify as a okay reason for the difference in pay. I have another question here from Darren. Do you have templates for hours of work, weekly and daily? The MOL told me they're not in the business of supplying such templates. That's a question from Darren. Darren, I'll have to double check with BR if we have templates. I'm not surprised that the MOL told you that they're not in the business of supplying templates. Many of the ones that they do have been at CFIB request, and we are pushing them to provide templates on things like keeping track of personal emergency leave days and what these scheduling templates should look like moving forward. We've gotten the same sort of response, but we are pushing them to do more, especially on the employer side. They are very employee friendly, but they're not great at helping business owners out after they've changed the rules. So it is something that we are actively working on. Again, I will check with BR and have someone contact you regarding the hours of work templates. I've got another question here from Jean on personal emergency leave days. Can you ask for a doctor's note for something like medical leave? Yes. So the answer, or the no doctor's note only applies to personal emergency leave. If you have another case like an employee is on short-term disability, or say has suffered an injury and you want to make sure that they're medically cleared to come back to work, you can ask for a doctor's note in those situations. It's only in the context of personal emergency leave that a doctor's note is not allowed. All right, I will do a last call for questions. And I am seeing none. So if you do think of any questions in the interim, please do feel free. Oh, one popped in from Daniel. Regarding the new on-call rules, if an employee is on call and called in, and an employee opts out of the shift and the employer consents to the opt-out, does the employer still have to pay for a minimum of 3 hours? So the 3-hour rule applies to, or when it comes into effect, again, won't come into effect until January 1st. You owe the employee 3 hours for putting them on call. If it's the case where they are called in while they're on call and refuse the shift and you consent, I'm not sure how that's going to play out under the new rules. That would be one that I would encourage you to call into BR on, and they'll be able to confirm with the ministry. That being said, the ministry is probably not going to give us an answer until later in the fall, because right now when we ask scheduling questions, the response we get is there's potential that these might change, so please call back later. Question from Lisa, where do we find all the things we need for compliance? So 2 steps to answer that question. First, what we're talking about here today is the stuff within Bill 148. There is still a whole bunch of other stuff under things like occupational health and safety that business owners do need to do to be compliant. That's under a different section, different inspectors doing different things. And we do have a compliance checklist available on the website as well as through our DMs. And if you would like it, Lisa, I can have someone from BR send that to you as well. When it comes to being compliant with Bill 148, what they're going to be looking for is that you're complying with the new rules. So if you pay minimum wage, are you paying the $14 or the student rate or the liquor service rate? Are you paying it correctly? Are you allowing your employees to take personal emergency leave? Have you, done the wrong thing and asked for a doctor's note? So as far as compliance on Bill 148 goes, there isn't a lot of record keeping right now, with the exception of maintaining those PEL documentation records if you have them. If you haven't received any, you're okay. And then the scheduling stuff moving forward if it does come into effect on January 1st. But in the meantime, I would say just, ensure that your, employees who have worked for more than 5 years, that they're getting their 3 weeks vacation, that if you have employees taking PEL days, that you are paying the first 2, that if you have a part-time and full-time employee doing substantially the same work, that they're being paid equally, and if they're not, that you are able to justify it. These are the kind of things that the inspectors will be looking for. Another question from Darren: for equal pay for equal work, is an employee with the title of junior baker, new to the job, to be paid as a senior baker, years of experience? So this is where it gets a little bit tricky. Based on the job title, the job title alone is not enough to substantiate different pay if they're doing largely the same work. Now, the argument you could make here is that the senior baker is being paid more because they have years of experience and the junior baker is new to the job. That explanation is okay because you're paying based on seniority. However, when the junior baker reaches the service time of the senior baker, they should expect to be paid at the same rate. So basically, the junior baker should expect the same pay progression as the senior baker has received, and that's where the equality is covered. That being said, seniority is an acceptable reason for a difference in pay right now. Darlene has asked if I can go over the vacation pay again. I will one more time, and then again, I will make sure that I follow up with everyone and share that as well. So on the vacation pay, employees who have worked for less than 5 years, nothing has changed. 2 weeks, 4%. Employees who have worked for more than 5 years, 3 weeks, 6%. If you have an employee who is coming up on their 5-year anniversary, up to that date, you can pay them 4% at the 2 weeks. After that date, you have to pay them at 6% and 3 weeks. Once they hit that date, you also owe them 2% back pay to the beginning of the calendar year, so that they would be being paid 6% for that 5th year. That is how that change works. Again, I will follow up to everyone who has asked this and put an explanation there too, because I know and I do appreciate that it is confusing. Question from Linda: a sole proprietor incorporated in 2014. Some employees have been with the business from sole corporation. How is the 5 years calculated? So it is our understanding that the 5 years are calculated from the time and date they signed the contract. So if the business has changed or the number has changed, I would highly recommend calling into BR. My inclination is that that's not going to make a difference if the business is still doing the same thing. We have seen that in other cases where a business owner effectively shuts down their business and starts up a new one doing the same thing. Ministry of Labor purposes, they kind of treat you like you're the same business, but it is very much case by case. So Linda, I highly recommend calling into BR and they'll be able to help you with the ministry. Question from Dale: PEL documentation or proof to be kept for 3 years. Is this only if proof is offered? Dale, yes. This is only if proof is offered or if you have asked for it and gotten it. So for example, if an employee takes a PEL day tomorrow and they say they're sick and you're good with that and they come the next day and everything's fine, no documentation, you're fine. You're okay. You're not going to, there's no trouble there for not having a record of it. If say I want to take a bereavement day leave tomorrow and I hand you the obituary to prove it, you have to hold on to that for 3 years. That's the documentation that you need to keep. So it's only if you ask for and receive or have it voluntarily offered do you need to keep it, but you are under no obligation to ask for it, which is key. A question from Charlene. Would it not make sense that someone is hitting their 5-year mark within the calendar year to just pay them the 6% from the start of the calendar year if there is no retro to do? Yep, you can absolutely do that. That is your choice. And I agree that it is likely easier to do, but you are not obligated to do it. You can pay the 4% up to that 5-year anniversary and then do the 2% retroactively and the 6% moving forward. Or if you want in the calendar year, you can just pay the 6% the whole way through. In that case, you will be covered. All right, I'll do a second last call for questions. Going once, going twice. Okay. Well, again, thank you, everybody. Oops, sorry. One last one from Darren. When I say no obligation, when it comes to proof for PEL, you are not obligated to ask for proof. You can, in certain circumstances, again, you cannot ask for a doctor's note. You can ask for proof, but you do not have to do it. You're not obligated to do it. So if you receive documentation, you are then obligated to maintain it, but you are not obligated to receive the documentation, which is to say that you don't have to have proof of every single PEL day if you don't want to ask for it, or if the employees don't volunteer it. That's between you and the employee. And a follow-up from Darren, to ask for the obituary notice, do you mean not at all? Understood that. So you are not allowed to ask for a doctor's note. You can ask for something like an obituary for bereavement if it's reasonable. And again, this is where this issue on PEL document or proof for PEL days gets a little bit dicey, because if the employee decides it's unreasonable, for example, I'm taking a bereavement day tomorrow, you ask me for an obituary, and I say I'm grieving, that's not reasonable, you can get in a little bit of trouble. I could take that to the ministry and make your life more difficult. That being said, the ministry could also decide that that's entirely reasonable. It really is a bit of a question mark on that front. So you have to do it case by case. And you also have to be prepared that if you do ask for proof that the employee could challenge you on it. Question from Linda, is the 6% vacation pay effective now or January 1st? That is effective now and has been effective since January 1st of this year, 2018. So that rule is in effect right now. It is something that we'll be bringing up with the new labor minister, particularly this confusing retroactive element. Again, I appreciate that it's confusing. We called the ministry a number of times to confirm that what they were saying was true, even though to us it didn't make a lot of sense. But yes, that currently is in effect right now. Okay, seeing no more questions. Again, if you think of anything in the meantime or later today, please feel free to send an email to Business Resources or give them a call. They will let me know and be more than happy to help you out. Again, anybody who asks for information on the Green Book or other things, I will follow up with you either later this afternoon or early tomorrow morning. I want to say thank you again for taking the time out of your day for listening to me. And I wish you all the very best. Have a great week, and we will now end the webinar.